Are you tired of trading zero DTE options and not consistently making money? Or maybe you're trying to trade them but really have no idea how to do it, or at least a simple way to do it? Well, I'm going to walk you through my simple and stress-free way to trade zero DTE SPX options. So let me dive in and show you exactly how it works and how you can start making money today. So this is the chart of SPX. I'm going to show you exactly how we do it. Number one, we need to pull up a charting platform. So I have up tradingview.com, which is a free platform. You can use your broker. You can use anything like that. Go to the indicator section and add this free indicator called the Bollinger Band indicator. So Bollinger Bands. Once we add this, we need to make a couple adjustments into what the settings are. So we go into the settings channel. We can see exactly how we're going to set this up. So we're going to set this up by doing a 200 as our length, saying that the middle line will be 200 period moving average. That's going to widen it out a tad, and this is going to give us what we want to see. So how do we make money from this? Well, I call it the range breakout approach, okay? So the way that this works is if the market breaks above the top blue line, we're going to do a call credit spread. That means that we're going to make money to the downside. If it breaks to the bottom portion or to the bottom part of this blue line, we're going to enter in a put credit spread. Again, this is only if it happens in the middle of the day. If this happens overnight, then we're going to avoid the trade. What do I mean by this? Well, let me give you two great examples. Number one, this stock opened up here that SPX the next day on Monday, or I should say over the weekend, opened and gapped way down below here. So it gapped down below this bottom blue line. So if it's saying it's below this bottom blue line, that would initially be a call credit spread trade. I mean a put credit spread trade where we aim to make money to the upside. But the problem is it did that overnight and it gapped straight to it. We don't want it to gap to it. We want it through normal price action trading in the middle of the day to go below this blue line. So here's a great example. Right here we gap down below it and then nothing happened. And then here we get a great trade. We're in the middle of the day. It broke to the upside. So we take a call credit spread trade, which means that we're betting for the market to go down. So we take the call credit spread trade and then it moves against us and we make money. Same thing here. It broke above. We took a call credit spread trade and it ended up going back against us and us making money. So again, if it breaks in the middle of the day, you want to take a call credit spread trade. And so that's going to be the way it works. And trending markets, you want to be a bit more careful, but in the range bound market that we find ourselves in today, what works best is trading these things. You can see here, it breaks down to the downside. We're going to enter in a put credit spread. Breaks to the downside, enter in a put credit spread. Breaks to the upside, break into a call credit spread. So again, that is what we're looking at, a very simple, stress-free way of understanding what trade we're getting into and why. Now, how do we target these trades? Well, we're going to target a 30 delta trade. So you can see here, once it breaks to the upside, we're going to look for a 30 delta call credit spread. If it breaks to the downside, we're going to look for a 30 delta put credit spread. And so again, that's how it works. Now, what happens when it's in the middle, right? There's no trade in the middle, right? We're waiting for a break above or a break below for us to enter in the stress-free trade, which is a great trade to take. But how do we do this trade or handle this trade when the market's in the middle? When the market's in the middle, what you can implement is called the Meic approach. What is the Meic approach? Well, the Meic is from this video, which is a super popular SPX trading strategy, which is where you do a multiple entry iron condor. And iron condor is where you bet above and below a price. And if the stock stays between it, then you make money. And again, you can watch this video by Tammy, which is going viral recently in the options world. And a lot of people are trading this on SPX. She'll walk you through the specifics of it, but when you combine the Meic approach, which is basically an iron condor, and you use it within its levels, your win rate is going to grow up dramatically. So again, when we're trading within the Bollinger Band, as we have the settings, all we need to do is put on an iron condor where our call credit spread is around this level and our put credit spread is around this blue level. When we do that, we structure an iron condor that has a really high chance of us making money, around the 70 to 80% range of us making money. Then when it breaks out to the upside, we get rid of the put side and we take on a call credit spread. When it goes to the downside, we get rid of our call and we do a put credit spread. So either way, super simple. I know I've thrown a lot of information out to you, so let me condense it one more time. We open up SPX on, or let's see, I'm on SPX right now. We open up SPX on our chart, same deal. We're going to add the Bollinger Bands indicator. We're going to have a 200 period for the middle. If it breaks to the upside during normal trading hours, we're going to take a 30 delta call credit spread trade. If it breaks to the downside, we're going to take a 30 delta put credit spread trade. We're going to have an ideal take profit of holding until expiration or 50%, whichever one you find best works for you. For our stop loss, we're going to use our strike price. Whenever the delta moves from 30 to 50 or roughly 30 to 60, when our contract moves to end the money, we're going to exit that position. So that's going to be around a 100% loss. So for instance, I'm just making up numbers. If we enter in at $100, which means we enter a credit spread and we collect $100, when it gets to 200 or 250, we're going to exit the trade. So that's kind of how that works. Now, the same way, we're going to make about $50 to $100 per trade, and with this really high win rate, it works out. Now, when we're trading in the middle, and we don't know really what to do because we've been trading in the middle a while, not when we shot back into the middle, because if it shot back into the middle, then we're already in a trade, right? So not when it immediately broke, but if it's been trading in the middle a while, then we're going to put on an iron condor, where we put on the levels where these blue lines are, and that's how we structure the trade, and that's going to work out well for us. So anyways, this is the stress-free SPX zero DTE trading system. If you like it, if you want to learn more about how I trade options, if you want to trade this inside my group where I can help you and guide you and teach you, and you can also use our alerts and software to do it, click the third link in the description down below to get free access to our program for our free trial. I don't typically offer it as a free trial, but you can click down below and get a free trial. And you also get 3 amazing free trading tools that you get to keep for life, even if you don't continue after the trial. All right, guys, hope to see you inside our private Discord group chat and on the next coaching call that you get as a part of for joining the trial. All right, guys, see you in the next video.